the hidden war inside every trader. Picture this. You're staring at your screen, watching red numbers cascade down like digital rain. Your heart pounds, your palms sweat, and somewhere in the back of your mind, a voice whispers the same question that haunts every trader. Why does this keep happening to me? The answer isn't in your charts. It's in your mirror. The discipline paradox. Why following rules feels impossible. Here's something nobody talks about. Having a trading plan is easy. Following it? That's where legends are born and dreams die. Research shows that cognitive biases affect traders at unprecedented levels. The confirmation bias makes us see patterns that aren't there. Loss aversion causes us to hold losers too long. The gambler's fallacy tricks us into believing past results predict future outcomes. But here's the twist: discipline isn't about willpower. It's about design. The most successful traders don't rely on motivation to follow their rules. They create systems that make rule-breaking nearly impossible. They use position sizing that removes the emotional sting. They set automatic stops that don't require courage to execute. They build environments where the right decision becomes the easy decision. Think of it like this. If you have to rely on discipline, your system is broken. The mastery of measured fear, risk as your greatest teacher. Warren Buffett once said, "Risk comes from not knowing what you're doing." But in trading, risk comes from knowing exactly what you're doing, and doing it anyway when your emotions hijack your logic. The greatest traders in history share one surprising trait. They're terrified of losing money. This fear doesn't paralyze them. It protects them, keeps their position sizes modest. It makes them exit bad trades quickly. It prevents the kind of overconfidence that destroys accounts. Consider this. If you're not slightly uncomfortable with your position size, you're probably risking too much. The sweet spot isn't confidence. It's controlled anxiety that keeps you sharp, alert, and ready to adapt. Professional traders often describe a feeling of healthy paranoia, constantly scanning for what could go wrong, not because they're pessimistic, but because survival is the prerequisite for success. The authenticity imperative. Why copying systems leads to catastrophe. The trading industry is built on a lie that successful strategies are transferable. Everywhere you look, someone is selling their proven system or winning formula. But here's what research reveals, and what successful traders know intuitively. Personality compatibility matters more than strategy performance. A momentum trader forced to use mean reversion strategies will struggle not because the strategy is bad, but because it conflicts with their psychological wiring. An analytical mind forced to trade on gut feelings will second-guess every decision. A patient investor pushed into scalping will experience chronic stress. The most powerful question isn't, what's the best strategy? It's, what's the best strategy for me? This requires brutal self-assessment. What's your actual risk tolerance, not what you think it should be? How do you handle uncertainty? Do you thrive on action or prefer patience? Are you naturally contrarian, or do you prefer following trends? Building a personalized approach isn't about finding the perfect system. It's about finding the perfect fit between system and psyche. The alchemy of adversity. How losses transform into wisdom. Every trading fortune has a graveyard of failures beneath it. The difference between those who quit and those who break through isn't the absence of catastrophic losses. It's what they do with them. Psychological research on post-traumatic growth shows that severe setbacks can actually accelerate development when processed correctly. In trading, this manifests as risk awareness, emotional regulation, and system refinement that only comes through painful experience. The traders who become legendary don't avoid the valley of despair. They mine it for insights. They study their worst trades not to torture themselves, but to identify the patterns that led to destruction. They ask uncomfortable questions. What story was I telling myself? What need was I trying to fill? How did my emotions hijack my logic? This forensic analysis of failure becomes the foundation of future success. Each blown account becomes a case study. Each emotional breakdown becomes data. Each moment of despair becomes a stepping stone toward mastery. The transformation happens not in spite of the pain, but because of it. Intuitive intelligence, the synthesis of experience and instinct. There's a common misconception that professional traders either use pure technical analysis or pure intuition. The reality is more nuanced. Elite traders develop what neuroscientists call expert intuition, a form of pattern recognition so advanced it feels like magic. This isn't mystical. It's neurological. After thousands of hours observing market behavior, the brain begins recognizing subtle patterns below the level of conscious awareness. A slight change in volume character, an unusual pause in momentum, a quality of price action that feels different. But here's the crucial point. This intuition is earned, not inherited. It's built through deliberate practice, emotional awareness, and constant calibration between feeling and outcome. The process looks like this: systematic observation, emotional notation, pattern correlation, and gradual trust building. Traders learn to distinguish between fear-based hunches, usually wrong, and pattern-based intuitions, often right. Professional traders often describe a progression. First you trade mechanically, then you trade intuitively, then you learn to blend both approaches dynamically based on market conditions and personal state. The size trap: how success plants the seeds of destruction. One of the most counterintuitive findings in trading psychology is that winning streaks are often more dangerous than losing streaks. Success breeds overconfidence, and overconfidence leads to position size increases that can destroy months of careful gains in minutes. The neurochemistry is clear. Winning trades release dopamine, creating a literal addiction to success. This biochemical reward system pushes traders to seek bigger and bigger hits, larger positions, riskier setups, longer holds. It's the same mechanism that drives gambling addiction. Elite traders combat this by implementing what psychologists call pre-commitment strategies. Rules they follow regardless of how they feel in the moment. They reduce position sizes after wins. They take breaks after successful streaks. They remind themselves that feeling invincible is usually a sign they're about to become very vincible. The mathematical reality is stark. If you risk 10% per trade, you can only lose 10 times before you're done. But if you risk 1% per trade, you can lose 50 times and still have half your capital. Position sizing isn't just about profit, it's about survival. The mindfulness revolution: trading as contemplative practice. Modern neuroscience has validated what ancient wisdom traditions always knew. Awareness changes everything. In trading, mindfulness isn't just helpful. It's essential for long-term success. The practice involves moment-to-moment attention to thoughts, emotions, and physical sensations while trading. This creates space between stimulus and response, allowing traders to choose their actions rather than react automatically. Research shows that mindful traders make fewer impulsive decisions, stick to their systems more consistently, and recover from losses more quickly. They develop what psychologists call metacognitive awareness, the ability to observe their own thinking processes. This might look like noticing the urge to revenge trade after a loss, observing anxiety before earnings announcements, or recognizing the subtle shift in breathing that precedes emotional decision-making. The practice transforms trading from a reactive experience into a responsive one. Instead of being pushed around by market movements, traders learn to maintain psychological equilibrium regardless of external conditions. Process obsession, the art of outcome independence. The most profound shift in trading psychology happens when success becomes redefined. Instead of measuring progress through profit and loss, advanced traders measure it through process adherence and emotional regulation. This creates a powerful psychological buffer. When your identity is tied to following your system rather than making money, market volatility can't destabilize your sense of self-worth. You can have a losing day and still feel successful if you executed your plan flawlessly. The process includes preparation rituals, decision frameworks, execution protocols, and review procedures. Each element is designed to maintain psychological consistency regardless of market outcomes. Professional traders often describe their best trading days not as their most profitable, but as their most disciplined. They feel pride not in winning, but in executing. This shift creates sustainable performance because it's not dependent on external validation. Dynamic certainty, the dance between conviction and flexibility. Elite trading performance requires a psychological paradox. absolute commitment to your analysis paired with instant willingness to change course when evidence shifts. This isn't contradiction, it's sophistication. The skill involves holding strong opinions based on current evidence while remaining open to new information that might invalidate those opinions. It's what military strategists call strong opinions, loosely held. This requires developing comfort with uncertainty and ambiguity. Most people need to feel certain to act, but professional traders learn to act with partial information while remaining ready to adapt. The practice involves clearly defined invalidation points, predetermined exit criteria, continuous hypothesis testing, and emotional detachment from being right. Identity transformation, from player to master. The ultimate evolution in trading isn't technical, it's personal. The traders who achieve legendary status undergo a fundamental identity shift. They stop seeing themselves as people who trade and start seeing themselves as traders who happen to be people. This isn't just semantic, it's neurological. When trading becomes central to identity, the brain reorganizes around market-relevant skills. Pattern recognition, emotional regulation, probabilistic thinking, and stress management. The transformation manifests in several ways. Decreased emotional volatility around trades, increased comfort with uncertainty, better risk assessment, and natural integration of market awareness into daily life. But the most important change is philosophical. The shift from trying to extract money from the market to trying to extract wisdom from the experience. When this happens, profit becomes a byproduct rather than the primary goal. The solitude solution. Why great traders don't follow. The final insight is perhaps the most challenging. Exceptional traders are essentially alone. Not because they're antisocial, but because their approach is so personalized that following others becomes impossible. They've learned to trust their own judgment over external opinion. They've developed internal validation systems that don't require social approval. They've become comfortable making decisions that others might not understand. This solitude isn't isolation, it's independence. It's the natural result of developing such deep self-knowledge that external guidance becomes unnecessary and even counterproductive. The path involves gradually weaning yourself off external validation, stopping the constant search for confirmation, reducing reliance on trading communities for emotional support, and building confidence in your own analytical abilities. The mirror's final lesson: what trading really teaches. In the end, trading isn't about money. It's about becoming someone who can handle money. It's about developing the psychological infrastructure to manage risk, process uncertainty, and maintain equanimity in the face of constant change. The market doesn't care about your financial goals, but it will ruthlessly expose every psychological weakness you bring to it. And in that exposure lies the opportunity not just for profit but for profound personal development. The traders who last don't just learn to read charts. They learn to read themselves. They don't just develop trading systems. They develop operating systems for life. Because once you've learned to maintain psychological balance while money appears and disappears on a screen, you've learned something that extends far beyond trading. How to be centered in chaos, how to act without attachment, and how to find peace in uncertainty. That's the real treasure. The money is just a bonus. The beginning of your journey. Every expert was once a beginner. Every master was once a disaster. Every legend started exactly where you are now. Uncertain, excited, and probably a little scared. The difference between those who make it and those who don't isn't talent, luck, or special knowledge. It's willingness to use the market as a mirror, to learn from losses, and to gradually become someone who trades with wisdom rather than impulse. Your next trade isn't just a position. It's a vote for who you're becoming.